So yes guys, the first thing that I told you beta is that under macroeconomics is nothing but the study of behavior of economy as a whole beta. There will be various economic factors beta that you will take into consideration beta, like growth, employment levels beta, currency value, which are used as such beta to understand the health of the economy as such beta. Remember guys, there are three important things beta. As a consumer, you will always want to know whether the prices of commodities are increasing, how much money will you need beta to maintain your standard of living, do you have to borrow money, will there be enough jobs in the market. As a producer guys, you will want to know whether you should invest more beta in creating more capacities to produce more, should you reduce the inventory levels, should you anticipate demand and produce more. As a government beta, you will need to budget your expenses, you will need to make policies beta, you will have to support few sectors. So all of that beta would be useful through the help of these guys, macroeconomic data that we have guys. Macroeconomics focuses on three important factors guys, that is unemployment, the national output guys, as well as the amount of inflation. Unemployment levels guys, inflation and national output. The objective of macroeconomics is very clear beta, that you need a very high and a sustainable growth rate. I gave you a lot of examples beta on sustainability guys. I said it is very important that whatever you do beta is sustainable, you can sustain it over longer period. You do not want a one-off thing. You will want lower price fluctuations in the economy, you would want the economy beta to be operating at full employment levels, balance of payments equilibrium guys. Your macroeconomics is also called as a theory of income and employment. Now guys, that was just the introduction that I gave you beta about macroeconomics. I also told you beta that microeconomics is about individual factors, individual persons as such guys. This very first chapter beta, determination of national income, is segregated into two subparts. Unit 1 national income accounting, unit 2 beta Keynesian theory of determination of national income. You are supposed to listen to the revision guys, you are supposed to listen to the revision video guys properly. Okay, I told you beta this national income accounting that we are going to do as such guys will fetch around 7 marks in the examination. Normally they ask a 3 marker or a 5 marker as a practical question beta, plus they also give one definition question or some factor guys. Scoring, you will have to get full marks in this chapter. So as far as national income accounting is concerned as such beta, we owe it a lot as such guys to Simon Kuznets, Richard Stone as such guys. Richard Stone, these two are the people beta who've contributed a lot to national income accounting. US published their first national accounts in the year 1947. National income guys is defined as the net value. When we use the word net beta, it is net of depreciation, and beta it is net of indirect taxes. Net value beta is net of depreciation, net of indirect taxes. That is why beta net value of all economic goods and services guys, economic goods and services, I repeat, economic goods and services only, produced within the domestic territory of a country, beta, during an accounting period. But because you're using the word domestic territory beta, you'll also have to write including factor income from abroad. Because we are using the word domestic territory beta, you'll also have to write including net factor income from abroad guys. And according to the Central Statistical Organization as such beta, national income is a sum total of factor incomes guys, factor incomes generated by normal residents. When you use the word normal residents as such guys, you're talking about national product, not domestic product. So generated by national residents of a country guys, in the form of wages, rent, interest and profit in an accounting year. I will be discussing a lot of things beta here. First thing guys, I said that if you were to understand these definitions of national income beta, if you were to understand these definitions of national income, you should know what are the types of goods. We divide goods into two categories. There are final goods and then beta there are intermediate goods. Final goods as such beta are those that are for end use as such guys, ready for use beta by whoever is the final user beta. Those final goods beta, we divide them into consumer goods and we divide them beta into investment goods. Investments beta can be made by consumers, can be made by producers. Consumer goods beta can be durables, semi-durables, non-durable, services. Give a lot of examples beta कि कौन सा कहाँ पे आता है. Consumer goods beta can be a fridge, can be a furniture that you're buying guys, can be clothes, can be food that you're buying as such beta, can be beverages that you're purchasing beta, anything guys. All of these beta are consumer goods as such guys, consumer goods. Investment goods beta will be say whatever are the investments that you are making as a consumer. You can buy a house as such beta, that is an investment product. And guys, when you say beta by producers, they invest beta in plant and machinery, they invest in land and building, there can be changes in inventories as such guys. Intermediate goods on the other hand beta are not ready for use beta by the final user, not ready for use. The sugar that is purchased as such beta by a bakery, the sugar that is purchased by a bakery guys is an intermediate product. The sugar beta that is purchased by a household as such guys is a final product, The cloth beta, the fabric as such beta, or a garment beta that is purchased by a producer producer as such beta will be an intermediate product. If you are purchasing a garment beta as a consumer, it's a final product. It's a final product. समझ में आ रहा है? Yes sir. The tube light as such beta or other things as such guys, consumptions that are tube lights purchased beta by a manufacturing company beta is an intermediate consumption. Tube light purchased by a household as such guys is a final consumption. Final consumption, a final product as such guys. So a lot of examples beta here. Rahul is replacing, I said beta, your car tires as such guys, it will be a final product. Tata Motors is buying tires beta, they're buying batteries, it will be intermediate product for them. And then beta, I said a farmer is producing a tractor, that's a final good as such beta. But if a farmer is procuring seeds or fertilizers as such beta, that will be an intermediate good for them. Tata Motors is buying a welding plant as such beta, it will be a final product for them. It's an investment good. But sugar purchase and all of these beta, petrol purchased by a household beta is a final product. But petrol purchased by a transportation company guys is an intermediate product. RCA is buying air conditioners, books. I gave these examples later as well. Then beta, I told you that it is important to understand the meaning of the word domestic territory. By domestic territory beta, we are referring to the word economic territory. It will also include those embassies beta outside India. It will include embassies outside India beta, Indian embassies outside India. It will exclude foreign embassies in India. Foreign embassies in India is not to be considered as economic territory. Economic territory matlab beta, within which there will be free movement of labor, free movement of goods, free movement of capital. Free movement of capital as such beta, your government is administering all of this. Your government can administer all of this guys. So that is an economic territory guys, economic territory. Then beta, I told you what is the meaning of the word normal resident. Normal resident beta normally resides in that country beta, plus economic interest lies in that country. Economic interest lies in that country. It does not matter beta as to you are a permanent citizen of which country. What matters is where are you normally residing and whether your economic interest is lying in that country or not beta. As a student beta, if you are visiting UK as such beta, you are not a normal resident of UK. But if you are going to UK beta for a job and you're staying there, then you will be a normal resident of UK. If you are going to US beta for medical treatment, you are not a normal resident of US beta. But if you are going to US for a job, you are a normal resident of US. Please understand beta, you stay there beta for a more than 1 year guys, and your economic interest lies there. Then guys, there are 4 sectors beta that you're supposed to understand. There is household sector beta, there is producer sector, then there is government sector, and then there is external sector guys. Household sector beta is the consumer of goods and services. It is also the one beta that owns all the factors of production. Owns all the factors of production. Then there is producer sector beta. Producer sector is the one beta that is producing goods and services beta. Government sector beta that acts as a consumer, that acts as a welfare agency, that acts as a producer. External sector beta is rest of the world, excluding India as such beta. Factor income and factor payments and transfer income and transfer payments is something that you should know better at this point. Factor income beta is the amount that is paid by the producer firms beta to the owners of factors of production. For land they will pay rent, for labor they will pay wages and salaries beta, compensation to employees. For capital they will pay interest, for entrepreneurship they will pay profit guys. So these are your factor incomes or factor payments. On the other side beta, there are transfer incomes or transfer payments. These are out of charity or grants beta. They are one side as such beta, they are not bilateral, they are unilateral as such guys. You are unilateral. If you're receiving certain amount beta from US as such guys, from your relatives, that is a transfer payment as such guys. That is a transfer payment as such beta, that is not a factor income. You did not render any service to them for which you are receiving money. What if beta you designed a website beta for someone in US as such guys? Now that will be factor income. That will be factor income guys. Understood? Yes sir. Always remember beta, things like scholarship, unemployment allowance beta, old age pension, these are all transfer payments guys. These are not factor incomes guys. Then beta, I told you to understand the concept of circular income guys in a 2-sector model. I will be discussing guys 3 sector, 4 sector, everything beta in the next chapter. In a 2-sector model beta, remember the household sector provides factor services guys to the producer sector, for which there are payments made as such guys, and then the household sector will spend money to buy goods and services, and the producer sector will provide them goods and services. Now different concepts of national income guys. I told you that we have United Nations system of national accounts beta that has given us a guideline as such beta to how to measure national income. Like how we have accounting for corporates, accounting for companies beta, that measures the performance of companies guys in the form of profits, assets, ratios, like that beta. We also have national income concepts beta. Perfect sir. There are 3 sides of national income accounting: product side, income side, and expenditure side. We have learned about value added method, we have learned about income method, we have learned about expenditure method guys. The very first thing beta that you will need here beta is gross domestic product at market prices. Now guys, when they ask you to define gross domestic product at market prices in the examination, go by each word beta. Gross bhi hai, domestic bhi hai beta, and market prices bhi hai. So you will say beta that this is the market value. When I say market value as such beta, this is not the net value. Market value of all goods and services, because this should include indirect taxes as well. When they say at factor cost as such beta, it will become net value. But when they say GDP at market price, market value of all final economic goods and services, market value of all final economic goods and services beta, which are produced within the domestic territory, of a country beta during an accounting period. No net factor income from abroad. GDP at market prices. Gross of depreciation, domestic, within the domestic territory of a country guys during an accounting year, and then beta at market prices. So that is why market value of all final economic goods and services. Why final? We do not take intermediate goods. We do not consider intermediate goods beta. We will have to take only final goods. Yes or no? Economic goods and services beta. Non-economic activities are not included, subject to exceptions that I will come to. Non-economic activities are not included, subject to certain exceptions that I will talk about. So you should know the definition of gross domestic product at market prices. Final market value of all economic goods and market value of all final economic goods and services produced within the domestic territory of a country during an accounting year. Now guys, domestic territory important beta. It does not matter which country's normal resident are you guys, as long as it is happening within the domestic territory of India. अगर चाइना का सर्जन बेटा comes to India guys and performs a surgery in India, that is the gross domestic product of India. It is within the domestic territory of India guys, Understood sir? Understood. So guys, given time period is important beta, usually a year beta, and I told you only final goods are to be included, intermediate goods cannot be included. If you include intermediate goods beta, it will result to double counting. At this point I gave you example beta of how guys there is sugar or certain guys products beta from the farmer going to the mill, from the mill it goes to a bakery. I said you cannot take you cannot take sales at every level beta. If you take that sales at every level guys, there is double counting. So to avoid this beta, what you can do beta is you can take only value addition at every stage. Or you take only those final goods and services beta, final consumer goods or final investment goods. But then it is very difficult beta to differentiate between a final product and an intermediate product. That is why beta what we do is we go by the concept of value addition. At every sector beta, what is the amount of their output as such guys, and what is their intermediate consumption. That will give us value addition at every stage. Perfect sir. So I gave you those example beta that you cannot take sale value at every stage because that is not your economic activity as such beta. So GDP at market prices guys is the summation of all final goods and services produced, final consumer goods, final investment goods. But because it is not possible beta, this is why we go by the concept of value addition. Whatever is the value of output beta minus intermediate consumption. Value of output beta will be sales plus changes in inventory. Okay. Now guys, because it is very difficult to add quantities as such guys, we measure GDP as such beta in money. So you will have to convert everything as such beta in monetary terms. What are the points to be considered guys while computation of GDP at market prices? Only final goods are to be included. Correct sir. Intermediate consumption should not be included beta to avoid double counting. This is flow of measure of output beta per time period. You cannot take guys second hand goods into consideration. Because that is not an economic activity created during the year guys. However, whatever is the amount of brokerage or commission paid for those second hand goods beta will form part of GDP of current year. Purchase or sale of shares or bonds beta does not result in flow of products or services guys. That is only flow of money. Beta. So you cannot take shares or bonds beta, capital investments into consideration. There is production boundary beta that is set by the system of national accounts. There you should know the definition between economic and non-economic activities. It is very important beta to know the difference between economic and non-economic activities. They can ask this in the examination. Economic activities beta are all human activities beta that creates goods and services that are exchanged in the market beta and valued at market price. All human, they will ask this in the examination beta. This is important. All economic activities, all human activities are such guys. ये human activities क्यों mention करते beta? Ocean में beta there are fishes, guys, breeding, forest में wild trees are growing. All of that is not considered beta as an economic activity. Those are not human activities arising out of the nature's process. Rainfall हो रहा है, पानी आ रहा है, not included. So all human activities beta that creates goods and services that are exchanged in a market and valued at market price. Non-economic activities beta, those human activities that produces goods and services, but these are not exchanged in market beta, and hence they do not command any market value. Remember guys, there are non-economic activities but still included as such beta is if there is own construction of fixed assets. Own construction of fixed assets, if there is production for self-consumption. Production for self-consumption guys. And imputed value of own houses. You should remember this beta, and changes in inventory. Changes in inventory. So imputed value guys of own rent. Imputed value of own houses beta. Rental value of own houses is included. Self consumption के लिए production is included. जैसे बेटा you are growing your own food as such guys, it is included. It is included guys. Any production of services beta for self consumption is not included. Production of goods beta for self consumption is included. Production of services for self consumption is not included. I give you a lot of examples beta, like you're fixing your own tube light as such beta, that is service for self consumption, not included guys, not included. Production of own construction of fixed assets included. Production of goods beta for self consumption included. Imputed rental value of own houses included. Changes in inventory included. Changes in inventory included guys. There are free transactions beta that otherwise would have fetch value, please include them as such guys. Barter transactions are included, please place a monetary value on them. Place a monetary value as such guys. Illegal transactions as such beta will not be included. Financial transactions are not included. Transfer payments are obviously unilateral beta, these are not related to economic goods and services, so please do not include them. By default as such beta, when you take market value of all goods and services, it is inclusive of depreciation. It is inclusive of depreciation. It is inclusive of all the expenses that they've incurred, including depreciation. So that is why you get gross beta. I gave you a lot of examples beta in the class, like I am fixing my own tube light as such beta, that is production of service for self-consumption, not included. I am hiring an electrician as such guys, included, because I am paying him certain service beta. I am cooking food for myself, not included. I have hired beta help as such guys, then yes beta, included. I am staying in my own house, imputed rental value of own house included beta. Construction of own house is included. Purchase of a car beta is included. Expenditure incurred on advertisement by a firm is intermediate consumption, not included. Purchase of machinery beta is a final product, included. Purchase of raw material is an intermediate product, not included. Then beta, after doing GDP at market prices guys, we did the concept of real GDP and nominal GDP. I said beta, when you measure at market prices, that will give you nominal GDP, but that is inclusive of inflation guys. If the GDP at market prices is increasing year after year, that does not mean the economic activity is increasing. So that is why we'll have to remove the impact of inflation. When you remove the impact of inflation guys and measure GDP at some base year price, that will be real GDP beta. So if you take quantity of goods beta into market price of current year, you get nominal GDP. When you take quantity of goods and multiply with base year price, you get real GDP. Quantity of goods with current year price is nominal GDP. Quantity of goods with base year price is real GDP. Your GDP deflator beta is nominal GDP divided by real GDP into 100. I repeat, your GDP deflator beta is nominal GDP divided by real GDP into 100. Using GDP deflator as such beta, using GDP deflator, you can compute real GDP, nominal GDP. ये important है बेटा. GDP deflator is nothing but the price index beta. ये अपन इसमें पढ़े से बेटा. Laspers index, Pache's index, वैसे ही बेटा. These are nothing but price index. Okay sir. Using GDP deflators beta, important concept. You can compute inflation rate guys. You can compute inflation rate. I gave you an example beta here also. In GDP deflator of current year minus GDP deflator of previous year divided by GDP deflator of previous year will give us inflation rate. Will give us inflation rate guys. Are we clear about this? Yes sir. Please go through that example beta that I discussed in class for GDP deflator. Now beta, from gross domestic product we moved on to gross national product. National product beta is basically accruing to normal residents of a country. Accruing to normal residents of a country. The difference beta between domestic and national product is that domestic is within the domestic territory of a country. It is still beta the market value of all final economic goods and services produced within the domestic territory. अगर उसको तुम लोग net factor income from abroad add करते हो बेटा, it will become gross national product. Remember guys, there can be certain product and services that are not manufactured in India. Just I gave you an example as such beta. I gave you an example beta wherein you are क्या बेटा, हाँ, you go to London as such beta, you perform a surgery there and come. It is not domestic territory of India as such beta, but still the income is accruing to a normal resident of India. Normal resident of India. Likewise beta, there can be people coming from abroad beta to India, working and going back. So that is all important guys. So if there is any say guys, profits of Reliance Industries in a UK plant, profits of Reliance Industries in a UK plant, it is a domestic product of UK guys, but national product of India, national product of India. Likewise beta, if you perform a surgery in London beta, it is domestic product of London but national product of India. London wala comes to India, performs a surgery, domestic product of India but national product of London. So gross national product beta is gross domestic product but plus net factor income from abroad. Net factor income from abroad guys, and that net factor income from abroad beta will be in the form of rent, interest, profit, salaries. ठीक है, ओके सर. सो हमेशा याद रखना, इफ यू आर मूविंग फ्रॉम डोमेस्टिक टू नेशनल, इफ यू आर मूविंग फ्रॉम डोमेस्टिक टू नेशनल बेटा, you will have to add net factor income from abroad. Net factor income from abroad. Understood sir? I told you beta that India's net factor income from abroad is negative. There are a lot of corporates beta, outside entities that have invested in India guys, so obviously beta a lot of profits are paid out as such guys to them, a lot of dividends goes out to them beta, so that results in net factor income being negative beta from abroad. ठीक है, but you might argue sir that a lot of individuals who work outside India, they transfer money to India. That is not included in factor income guys, that is a transfer payment. So I know beta that a lot of Indians are there beta whose families are in India but they work abroad and they keep sending money to India. That will increase guys personal income of India. It is not included in national income, it is included in personal income. तो उसको तुम लोग इसमें मत लेना. That is only a transfer payment beta when they send money, so that will be included in the personal income of India. Understood sir? Okay sir. So definition beta of gross national product beta is market value, मतलब GDP का definition guys, plus net factor income from abroad. Okay sir. Now guys, the next important concept is the difference between the word gross and net. By default beta, when we use the word gross, it is inclusive of depreciation. But understand beta, investment net of depreciation is something that is adding to the production capacity of a country. What adds to production capacity beta? Depreciation beta is merely replacement of fixed assets. That is not adding to the production capacity. So that is why beta people might be interested in knowing the concept of the meaning net as such guys. So if you want to compute net domestic product beta using gross domestic product, you will have to deduct depreciation. If you have to compute net national product beta using gross national product, deduct depreciation. From gross, if you deduct depreciation, you arrive at net. From gross, if you deduct depreciation, you arrive at net. From to domestic product, if you add net factor income from abroad, you arrive at national product. ठीक है, ये फंडामेंटल रूल्स याद रखो, फॉर्मूलास रट्टा मत मारो. Then beta, you have to understand the difference between the word market prices and factor cost. Understand guys that when there are guys, when you make payments as such guys to a producer firm to buy product and services, that entire amount is not coming back to you as such beta as factor payment. A part beta goes to government in the form of indirect taxes. Likewise, I gave you this example beta. For example, say you buy a product of 100 rupees that has 20 rupees GST. So 20 rupees beta will go to government and 80 rupees beta will be redistributed as factor incomes beta, factor incomes. ठीक है, understood sir? Or other example beta, there's a subsidy on a product. You pay 150 rupees to a company, government is giving 50 rupees to that company as such guys. Government is giving 50 rupees to that company for that product as a subsidy beta to promote that product. I gave example of electric vehicles. So actually beta 200 rupees is being received by the producer firm, that will come as factor payments. तो इसीलिए beta you have to deduct indirect taxes, add subsidies, or beta I would say simply deduct net indirect taxes. Net indirect taxes are indirect taxes minus subsidies. Indirect taxes minus subsidies. So if you deduct net indirect taxes from market prices, you will arrive at GDP or GNP or NNP or NDP at factor cost. The difference between market prices and factor cost beta is net indirect taxes. From market prices, if you remove net indirect taxes beta, you will arrive at factor cost. From market prices beta, if you do, I told you beta the impact of indirect tax, impact of subsidy. Okay, from market prices beta, if you remove net indirect taxes guys, net indirect taxes, you will arrive at factor cost. Okay sir. Now guys, so this is the concept as such beta here. Clear sir? You should know beta, you should know what is factor cost, you should know what is market price, you should know the difference between gross and net, you should know the difference between market price and factor cost, you should know the difference between domestic and national. Okay sir, we know all of this. There are two types of indirect taxes and subsidies beta. This has been asked in the RTP guys or in an examination. One is production tax and subsidy, the other one is product tax and subsidy. Production tax and subsidy does not depend on the quantity of goods and services that you have manufactured during a year guys. Production tax and subsidy beta does not depend on the quantity of goods and services. Product tax and subsidy beta depends on quantity of goods and services. So say for example, government gives a subsidy of 1 crore rupees, that is production subsidy. Government gives a subsidy of 20,000 rupees per vehicle, that is product subsidy. Government charges GST per unit, that is product tax. Government levies license fees, that is production tax. Okay sir. I told you beta that India follows a concept of basic prices guys. इंडिया फॉलोज अ कॉन्सेप्ट, ये पूरे है बेटा तुम्हारे को, ऐसे रट्टा मत मारो गाइस, यू विल नो गाइस, इफ यू आर मूविंग फ्रॉम मार्केट प्राइसेस टू फैक्टर कॉस्ट यू हैव टू रिमूव नेट इनडायरेक्ट टैक्सेस, इफ यू आर मूविंग फ्रॉम ग्रॉस टू नेट यू विल हैव टू डिडक्ट डेप्रिसिएशन, इफ यू आर मूविंग फ्रॉम डोमेस्टिक टू नेशनल यू विल हैव टू ऐड नेट फैक्टर इनकम फ्रॉम अब्रॉड. ओके सर. Now guys, at this point beta I told you as to what is the basic price padhata hu beta. At this point I told you that NNP at factor cost, net national product at factor cost, is nothing but the definition, nothing but national income. Now you can go back to the definition of CSO beta. You will understand that it is the net factor income as such guys accruing to all normal residents of the country during an accounting period. ठीक है? Yes sir. India में बेटा we measured something called as basic price. So instead of measuring directly बेटा at factor cost as such बेटा they're reporting at basic prices as such guys. Basic price बेटा is market price minus net product indirect taxes. Net product indirect taxes. They're like production indirect taxes नहीं हटाएंगे. So from market price if you remove only product taxes you get basic price. From basic price if you remove production taxes also better you will get factor cost. I showed you those government के sheets also as such beta, if you want you can refer to that. Next beta we moved on to the concept of circular flow of income as such guys. I said beta national income can be measured in three ways, either at production phase beta by measuring value addition at every sector, or beta in the income distribution phase by measuring factor incomes guys, or at the expenditure phase by measuring what is the amount that is spent by the households, by the consumers, by the producer firms beta. Understood sir. Method one beta value added method or product method, ये अपन आज ही रिवाइज किए थे बेटा, but I'll still revise the entire thing. Under method one beta that is value added method guys, I spoke about that our objective beta is to arrive at value addition at each stage. Value addition इसलिए because we cannot include intermediate consumption, and plus it is difficult beta to only add final goods and services because you will not be possible to segregate final goods and intermediate consumption. So you divide the entire economy beta into different sectors as such guys. You will measure the value addition at every stage. Summation of value addition is gross value added at market prices, that is nothing but beta GDP at market prices. We divide our sectors into three categories called as primary sector, secondary sector, tertiary sector. Primary sector beta is अन्नदाता बेटा, the one अन्नदाता, metal दाता, जो भी दाता बेटा. हाँ. Primary sector is where the raw materials originate guys. Secondary sector is where the raw materials are converted into finished goods. Tertiary sector is the service sector. Service sector guys. So you compute the value addition at every stage beta. Remember it is if they give sales beta, sales we have to take production. That is why we'll have to add changes in output as well beta. Changes in output as well. So sales plus change in stock minus intermediate consumption beta will give us gross value added. Will give us gross value added. Perfect guys. Once you arrive at gross value added beta at market price, you know beta that you have to compute national income, so you will have to go at NNP at factor cost. You have to go at NNP at factor cost. So this is gross domestic product at market prices beta. If you add net factor income beta, you are moving to national product. If you remove depreciation, you are moving to net. If you remove net indirect taxes beta, you are moving to factor cost. हो गया. So you add net factor income from abroad, you deduct depreciation, and then you deduct net indirect taxes. You arrive at NNP at factor cost. यहाँ पे बेटा you'll have to remember all the points that I told you under GDP at market prices computation. Okay sir. Method 2 beta is income method. This is factor payments method as such guys. So here beta at this point under factor payment, this method beta will not give us GDP. It will give us NDP, net domestic product at factor cost. Net domestic product at factor cost. What we are measuring beta is the amounts paid out as factor incomes. So यहाँ पे beta we write under income method as such beta we write remember this gives us NDP at factor cost. So we write compensation to employees in the form of wages and salaries, rent-free accommodation, employers' contribution to social security schemes. Then we add operating surplus beta, that will be rent, interest and profit. And then beta we take mixed income of self-employed. Mixed income of self-employed. Sir, what is mixed income of self-employed? It is difficult to segregate beta self-employed ke liye as to how much is the labor component, how much is the capital component. That is why we simply write mixed income of self-employed. Okay sir. So this is your NDP beta at factor cost. Okay sir. Then beta you compute net national product because this is domestic product. You add net factor income from abroad. If you are receiving a gift beta from a relative in US, it is not a factor payment, it is a transfer payment, not included in national income. If there is interest on consumption loans as such beta, that's say if you're taken a house as such guys and you're paying interest, not included guys. If there is interest on national debt, not included. Government is supposed to spend only on consumption. RIL has made a profits in UK beta, I said included in net national product, not in net domestic product. If there's any capital gains as such beta, sale of land and goods and services, not included. Interest received on debentures, included. It is for productive purpose. Under expenditure method as such beta, we add all the factor incomes received as such guys. We add all the factor income, sorry, whatever are the factor incomes as such beta, those are spent beta. So you take all the expenditure. So you'll have to add only final expenditure beta, not intermediate expenditure. Remember, you'll have to add only final expenditure, not intermediate consumption. So these final expenditures as such, guys, are segregated into private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, gross domestic capital formation, and then beta net exports. Net exports as such, beta, that is exports minus imports. Exports minus imports, beta. Under this thing बेटा, प्राइवेट फाइनल कंजम्पशन एक्सपेंडिचर तो तुम्हारे को आएगा ही बेटा, गवर्नमेंट फाइनल एक्सपेंडिचर भी आएगा. आई टोल्ड यू गाइस क्या था ये, हाँ. ग्रॉस डोमेस्टिक कैपिटल फॉर्मेशन को बेटा डिवाइड करते हैं ग्रॉस डोमेस्टिक फिक्स्ड कैपिटल फॉर्मेशन, दैट इज इन्वेस्टमेंट इन फिक्स्ड एसेट्स बेटा बाय कंज्यूमर्स एंड बाय हाउसहोल्ड सेक्टर बेटा एंड बाय द प्रोड्यूसर फर्म्स. देन अपार्ट फ्रॉम दैट यू विल हैव चेंजेस इन इन्वेंटरी, एंड अपार्ट फ्रॉम दैट बेटा यू विल हैव वैल्यूएबल्स. You will have valuables, guys. Why are we taking changes in inventory, guys? Because when you take private final consumption expenditure, government final consumption expenditure, it will only match with sales. But we want produced during the year. That is why we'll have to take changes in inventory as well. That is why we'll have to take changes in inventory as well. So this comes under gross domestic capital formation. Gross domestic capital formation. उसके नीचे तीन चीजें, fixed capital formation, changes in inventory, and valuables. And valuables. Okay. If they use the word fixed capital formation, it means it is only tangible assets. They are not including changes in inventory or valuables. If they use the word gross capital formation, सब कुछ आ चुका है. You do not have to include valuables or changes in inventories again. Okay, sir. I've given you explanation as to why are we adding exports and why are we deducting imports. Perfect. Then guys, CIG plus CIG x minus M beta, that is how you compute your final expenditure. Farmer is buying a tractor beta, it is a final good included, so that will come under gross capital formation. Rahul buys shoes beta, it will come under private final consumption expenditure. RCA spends on books beta, it is an intermediate good beta, not included. RCA buys ACs, it will come part of the it will form part of gross capital formation. Farmer spending on fertilizers beta, not included because it's an intermediate product. Farmer buys a tractor as such beta, it will come, I gave it that. Rahul buys a second hand car, not included beta. Second hand goods do not form part of economic activity of the current year. Government spends on vaccines, included. Government is giving 2000 rupees, that's a transfer payment, not included. So this is where you'll understand beta. When you add value added method mein beta, when you're adding all the value added as such beta, you're getting GDP at market prices. Under income method as such beta, when you're adding all the factor incomes, you get net domestic product at market prices, at factor cost beta, sorry, net domestic product at factor cost. And under expenditure method beta, you get GDP at market prices, GDP at market prices. Ideally beta, all of these methods should give us the same answers as such guys, but then there can be discrepancies. There can always be discrepancies as such guys. India beta follows a combination of multiple methods. For agricultural sector and manufacturing organized sector beta, we follow value added method. For small scale sector, we follow beta income method. For construction businesses beta, we follow expenditure method. Developed economies follow income method because a majority of them beta file taxes, all of them are within the system. ठीक है सर. After this beta, we moved on to concepts of private income, personal disposable income, national disposable income, gross national disposable income. Out of the total national income beta, part accrues to private sector, a part accrues to public sector. The part that accrues to public sector beta is termed as income from property guys and entrepreneurship of government departments. Okay. And then beta the other one beta non-departmental enterprises, these are set up as separate entities, usko hum log bolte hain savings of non-departmental enterprises. So if you remove this part beta from total national income, what you get beta is national income that is accruing to private sector. I repeat, what you get beta is national income that accrues to private sector. So hence beta NNP at factor cost accruing to private sector is total national income minus whatever is accruing beta to public enterprises. Okay, okay sir. Once you arrive at national product beta, that is national product income beta, that is accruing to private sector guys. To that beta, if you add certain incomes as such guys, certain receipts that may not be from productive sources guys, or it may not be an income. Jaise beta interest on national debt beta should be added, interest on national debt, because interest on national debt does not form part of national income guys, because government is borrowing money beta for consumption purpose and not for productive activity guys. ठीक है बेटा. And then you will add transfer payments from government, transfer payments beta from rest of the world, and that will give us private income. This is basically beta the total income that is accruing to private sector from all sources, productive or non-productive. Total income beta accruing to private sector from all sources guys, does not matter if it is productive or non-productive. From total private income beta, if you remove corporate taxes that is going to government, and if you deduct retained earnings beta, which are savings of corporates, you will get personal income, the income that is actually being received beta by the household sector, understood, sir? So that will give us personal income. From this personal income as such beta, if you remove personal income tax and other non-tax payments that are made to the government, you will get disposable personal income. Disposable personal income beta is a true measure of what is the money available with the public for the purpose of spending, consumption and savings, guys. As per ICI beta, I told you that personal income is national income beta plus interest received but not earned minus interest earned but not received, guys. वो पूरा same ही है, guys. Disposable personal income. Then beta, I told you national disposable income, that is from the viewpoint of nation, guys, not from the viewpoint of private sector. So there beta, you will start with national income as the base and add transfer payments from rest of the world, because that is adding to disposable income of the nation as a whole, and also add net indirect taxes, because that is the money within the country only. Add net indirect taxes beta. So that will become net national disposable income. Okay, to this if you add depreciation as such beta, you will get gross national disposable income. Gross national disposable income. If you want to compute per capita income as such beta, it is national income divided by population. National income divided by population. ICI mein beta, it uses the word GDP per capita, hence it is GDP divided by population. After that beta, we moved on to usefulness and significance of national income, guys. That is the last topic that we did in the day. National income beta is a measure of economic activity, guys, measure of welfare of people, guys. But income inequality kitna hai, what's the consumption pattern, how different sectors are growing, international comparisons can be made, guys, policies can be computed based on different economic indicators. The system of regional accounts in India, guys, we have the Ministry of Statistics and Program Implementation, under which beta we have Central Statistical Office, under which beta we have National Accounts Division. At the state levels beta, we have the state directorates of economics and statistics beta, state directorates of economics and statistics, under which beta you will have the state income units. There can be supra-regional sectors beta, those sectors that provide or add to economic activity of more than one state, guys. So there should be a reasonable basis of allocating it to different states. Then beta, can GDP be taken as a measure of welfare of people? There are many arguments against it as such, guys, that GDP cannot measure income inequality beta. Increase in output may not actually result in increase in employment. It does not take the education levels as such, guys, the health क्या बोलते हैं बेटा उसको, life expectancy into consideration, your leisure time, and there are economic bads as such, guys. ठीक है, illegal activities are not considered. After that beta, in the end, guys, we did limitations and challenges of national income accounting. Limitations and challenges. ठीक है? Yes, guys, with that beta, I have revised the entire thing as such, guys. We will be solving a lot of questions in the next class as such beta, and then we will finally wind up unit 1, guys. Other chapters will not take so much time. Okay, guys, I hope you have actually listened to the entire revision as such, guys, properly. You did not skip any part of it. Chalo, guys, bye bye. I'll see you guys in the next class. Take care, guys. Keep revising. Go through the entire information once beta. जो भी class में notes लिखा है ना, those are summary notes. You will go through that entire notes. Understood? Understood, sir. Bye, guys.